crypto infrastructure as a whole and as a category has done a really good job at creating other infrastructure for other crypto companies. So this thing called the crypto economy has been somewhat circular in the extent to which, the TAM was there, so to speak. And the TAM has grown, as the crypto economy has grown. But to date, a lot of companies have struggled to really kind of cross the chasm from this thing called crypto, which is a roughly $3 trillion asset class, and as a derivative or subset of that, stablecoins is a piece of that pie, and the much more broad, massive value transfer ecosystem that exists on a domestic basis and in a cross-border basis, which is in $100+ trillion land.
But first, a quick message from our sponsor. Hey, FinTech friends. Are you ready to scale your FinTech product? Introducing Newline by Fifth Third. With Newline, you can launch payment, card, and deposit products directly with Fifth Third Bank. Newline combines the power of a top 20 bank with an API-first technology platform, unlocking the next generation of embedded finance solutions. Set your product up for success with a reputable bank partner and enjoy the best of both worlds, innovation and financial strength. It's time to raise the standard of embedded financial solutions with a platform designed for the enterprise. Learn more at newline53.com. That's NEWLINE53.com.
Welcome back, everyone, to This Week in FinTech's podcast. I am super excited today for our conversation. We are sitting down and talking about what I feel like has become my favorite topic this year, stablecoins and digital payments in the US. I am joined today by Dan Mottice and Matt Marcus at Modern Treasury. Dan was recently the founder and CEO of Beam, which was just acquired by Modern Treasury last month. He's a former product lead for crypto products at Visa and built Beam over 4 years before they got wrapped into Modern Treasury. So congratulations on the acquisition. Matt, meanwhile, is the co-founder and CEO of Modern Treasury, who started off as a chief product officer and this year moved into the CEO role. He was formerly a senior software engineer at Lending Home, a company I knew very well because I was working at Funding Circle at the time. So it has a lot of fintech background and chops that he brought to founding Modern Treasury. For those of you who don't know Modern Treasury, let me give you a little bit of background. Modern Treasury provides trusted infrastructure for money movement. The company helps teams launch and scale payment experiences in days, not months. With best-in-class developer tools and a single API for fiat and stablecoins, plus built-in compliance, ledgering, and reporting, they enable businesses to move money instantly, reliably, and at scale. They're backed by leading investors, including Benchmark, Altimeter, Salesforce, and they power hundreds of companies across different industries, helping them build faster payment experiences with real-time visibility into every transaction. They're helping bring this episode to you today as one of our sponsors, and they've been a longtime partner and company that we admire. So I'm very excited to sit down with their team. And let me call out, we would love to see them with us at StableCon 2026, the conference focused on stablecoins, where we're going to be hosting in our Amsterdam conference focused on EMEA, May 19th and 20th, and our US conference from September 9th to 11th in Washington, D.C., focused on exactly this topic, improving payment systems with stablecoins. If you're interested in hearing more of these conversations, please check out our hosts Chuck and Raj and their podcast Money Code, which you can see at moneycode.show. Now, I'd love to turn it over to Dan and Matt, our guests today.
Thanks for having us.
Yeah, thank you very much. Good to see you again.
Good to see you. Yeah, for people who don't know, Dan and I have been talking for, I feel like, at least 2 years about stablecoins. And now it seems like everybody is talking about stablecoins. So Dan was a longtime believer in this space before people decided it was going to be the next new hot product category. I know I gave like a very, very quick summary of your bios and backgrounds, but I'd love to turn it over to both of you guys just so that our listeners know a little bit more about who they're hearing from today. Matt, maybe you'd like to kick us off with your background.
Definitely. Yeah. And I didn't know about your background in marketplace lending too. So that was a lot of fun back in the mid 2010s.
Long time ago.
But it was fun. So my co-founders and I worked at Lending Home. Now it's called Kiavi, which is an online mortgage lender. And while we built the system for mortgages, we also had to move a lot of money. We were funding loans, servicing, so collecting repayments on those loans. And we had to work on money movement systems, ledgering systems, payment operations tools in-house. And we thought, this is crazy. There's all this infrastructure off the shelf that we should be able to replicate around payments and money movement, but no one else has done that. Like, why not? And around 2018, we started approaching this problem space we just decided it was a hard problem that nobody had really tackled. And so we started Modern Treasury to be that API platform we wish existed. Did YC at the time. As you mentioned, my background's in engineering. So I wrote a lot of code, built a lot of our API docs in the early days. Still do that a little bit here and there. Recently moved into the CEO role as well. And so we're very excited for the work we're doing with Dan and with stablecoins. And so I'm sure we'll get into that a lot more. But I'll pass it to Dan to introduce himself.
Awesome. Yeah, Matt. For additional context, as Nik referenced, was at Visa for a long time before starting Beam, mostly focused on traditional money movement systems. So there's platforms such as Visa Direct, and more recently the involvement of Currency Cloud and the broader Visa orbit. Focused a lot on the intersection of all that stuff, and in doing so, got really excited by the idea that is kind of 24/7 global money movement using internet native money. Hence the interest in stablecoins, earlier on, in kind of the broader industry. As you said, worked on Beam for about 4 years, left Visa in March of 22 to kind of leave and raise money, and then built out several iterations of the platform and landed in a spot where it made a bunch of sense to buddy up with Matt and the team at Modern Treasury. And here we are. So excited for the future, still plenty to be built. But I think what we're building now together makes a bunch of sense. And I'm excited to share a little bit more detail on that.
Yeah, definitely. The fun part starts now. We're recording this on November 5th, 2025. And, we're talking about an acquisition that just came to light back on October 22nd, right before Money 2020. And so hopefully we're getting this out very fresh for our readers. But I was very excited to see the announcement when it came out on the 22nd that Modern Treasury was acquiring Beam. And I would be curious to learn a little bit more about what the backstory is behind the acquisition, how you both found each other, and then how you decided that this was the right path forward. Looking at the announcement when it came out, Matt, you had this great quote that, Beam has proven traction delivering real-time payments for stablecoin native payment flows, where Modern Treasury has processed hundreds of $billions of, call it conventional digital payments. And you wanted to build, one API for both fiat and stablecoin payments. So everything covering push to card, to RTP, to FedNow, to ACH, to wires, basically being able to move money agnostically to what rail it's moving on for your customers. When did you decide that, this was the right path forward to come together? And, what was that process like leading up to it?
In some ways, this actually goes back almost 5 years. So if you go through our blog 5 years ago, there used to be a way to sign up for Modern Treasury and get up with a bank partner and move money same day. That was great for fintech innovation. We worked with a lot of our customers who are early stage businesses, as well as companies that are going to be going public shortly, who started with Modern Treasury on that path. That was nearly 5 years ago. Over the last few years, we've seen the banking landscape, get a lot tighter. We've seen things like SVB collapse, a lot of the crypto banks like Silvergate collapse as well. And so I think the friction for fintechs and marketplaces in operating in the financial system has just increased a lot. And that's not good for innovation. It makes it harder for people to build new products quickly, for developers to test ideas, and for people to build their businesses. And so we've been thinking about this problem a lot over the last few years, and especially over the last year when we started to see stablecoins come up as an alternative mechanism for interacting with money. We got very excited because we saw this as another way for these fintechs to interact with money and with the financial system. And so earlier this year, in May, we did our first beta product where we launched what we called stablecoin payment accounts, which is like an alternative to getting an FBO with a bank. So it's a way for a fintech to hold user funds in stablecoins, but still facilitate payments in and out with ACH rails, wire rails, and things like that. But I think when we built that product, we saw that having a more tightly coupled, fully integrated experience within Modern Treasury would be a lot better for our users, more of a one-stop shop, more of a place where they could leverage all of our APIs and our ledgering system. And so in the summer, we started working on building that out. A little bit of we talked with a number of folks, did the build by partner calculus. And my co-founder, Dimitri, has known Dan for a while, and I got to know Dan over the summer quite well. And like Dan was saying, we really saw what we were trying to build as like sharing a vision around money movement in the future and having one system that was interoperable between fiat and stablecoins. I think for both of us, we saw this as in a way to accelerate that, really, for us to bring the platforms together and have like a really seamless integrated platform. So not something where we have different payments products, one for fiat, one for stablecoin. It's really important that these things work together. And so Beam is, being fully integrated to Modern Treasury into one API, so that it's really easy for developers to build, like get going in days, but also not have to speak different languages when they're going between USD, USDC, or doing an ACH versus an on-chain transfer. So I think that's really important, because finance teams at the end of the day are going to have to read data from the same system. They're going to want to log into Modern Treasury and see all their transactions in one place. And the end user, in a lot of cases, doesn't care how the money's held as long as they know that it's secure, it's ledgered, it's held in a USD or USD derivative. That's what we've been working on with the Beam team thus far over the last, you mentioned the date, about 2 weeks, is just, one team, one dream, one code base, and getting everything integrated as quickly as we can.
Yeah, how's that integration process been? I know it's always hairy when you go through acquisitions, trying to make systems work together, but hopefully it hasn't been too difficult this time around. I'm curious, how much overlap is there between what Beam and Modern Treasury were already doing?
So far, so good. It's been tremendous. I think so far the Modern Treasury team has been very supportive of the integration of both the Beam team and platform. I think most importantly, to your point, we do really share an overlapping vision as to what's possible here. And so as it relates to kind of the ethos of how we've been building at Beam and now will be building at Modern Treasury, there's not any culture clash. There's not misalignment as to how things should be built and what things should be built, really. So it's been fairly easy for the team and platform to kind of slide into place. Moreover, a lot of the kind of underlying infrastructure that the Modern Treasury platform has historically interacted with is also infrastructure that Beam has historically interacted with. So not only from a kind of like payment workflow management perspective, but also from a kind of underlying financial platform plumbing perspective, even down to which bank we'll be building this on, for example. There's just a lot of kind of institutional, know-how shared between the two companies that has made it easy for the Beam team to hit the ground running. I think as it relates to kind of like how I'd position Beam and why this makes a bunch of sense, historically, Beam has been very focused on becoming or being a full stack payment processor alongside the stablecoin capabilities that we availed to our customers. And so I mentioned that because we've spent and invested a lot of time and money into integrating with what we call like the best fiat rails that exist for the purpose of really on and off ramping, though it's become now called orchestration. And so I think naturally, because of the focus on connectivity and processing using RTP and Visa Direct and other kind of complicated payment systems that move money instantly, it's been fairly easy again to plug that into a platform that has been doing that at scale for several years now. And I think that's one of the kind of edges that we have in market now is how strong Beam plus Modern Treasury, under this new umbrella will be in bringing to market a capability that is best in class and strongest on the fiat side, in a world where it can also facilitate payments in the flow of funds directly versus requiring a customer to bring their own bank account, which, as many people who will be listening know, takes a long time and is quite expensive. Moreover, as a big part of that, obviously, the Beam team and Beam Stack will bring the kind of technical know-how and technical capabilities to offer stablecoin capabilities alongside all of the other great capabilities that people will need from the platform, which will, of course, be stablecoin heavy, but will not be stablecoin only or exclusive based on what we're seeing.
Do you see the joint fiat stablecoin offering changing the kind of companies that Modern Treasury can work with? And I'm curious, if this is really a market expanding acquisition, which companies did you have that, or which types of companies do you have that were asking for this before? Or how do you see Modern Treasury's ability to better service new types of companies?
So, to level set, we provide payments infrastructure to these fintechs and marketplaces. They're all, I would say, innovators. They're building their platforms on top of us. In aggregate, they're moving hundreds of billions of dollars a year using our technology. And so these are companies who inherently want to innovate and want to push the envelope. And so the types of flows that they're powering with us might be things like B2B payments. So you have an ERP system or vertical software company, and they're using payment methods like ACH and wire. They're looking to use this to integrate stablecoin payments, whether it's for the stablecoin sandwich type flows So better cross-border payments, but also looking at how can they actually pay out stable coins to vendors that they're paying overseas, let's say. In that sense, it's going to be a lot of the same. So same types of companies looking to see how can I use stable coins to change my business. And already, and part of the reason we pursued this path is that our customers have been asking us about it in traditional spaces. Think like escrow or bill pay or neobanks. These are all the types of like innovative fintech companies that we see in the US already using Modern Treasury. I think where we're going to see some expansion is, with stable coins, it's making the dollar accessible to non-US fintech platforms in a way that was either really hard for them to work with before or impossible in some cases. And so we're seeing companies that are not US native, whether they're in Latin America or other regions, looking to leverage Modern Treasury for holding their user funds, facilitating payments in and out of local currencies, as well as like cross-border remittance flows. And so I think we're going to see a lot more of that leveraging Modern Treasury. And I think that's a great thing because it's going to empower a lot more innovators around the world. It's also a good thing for the US because it means that more people are going to be using the US dollar to power fintech experiences in other countries. So I'm happy at that for that, at a American level as well. Dan, anything you want to add there?
No, I think that was a good summary. I think one other interesting, element I've been reflecting on is that crypto infrastructure as a whole and as a category has done a really good job at creating other infrastructure for other crypto companies. So this thing called the crypto economy has been somewhat circular in the extent to which, the TAM was there, so to speak. And the TAM has grown, as the crypto economy has grown. But to date, a lot of companies have struggled to really kind of cross the chasm from this thing called crypto, which is a roughly $3 trillion asset class. And as a derivative or subset of that, stablecoins is, a piece of that pie, and the much more broad, massive, value transfer ecosystem that exists on a domestic basis and in a cross-border basis, which is in, $100+ trillion land. And so one of the things I'm very excited about as a part of Modern Treasury now, and what we're already seeing in terms of internal discussion with folks, is folks that I'd put in the chasm crossed territory, which are very traditional, very large companies, very scaled companies that have done hundreds of billions of dollars of PV through somebody like JPM and Modern Treasury, but now are very interested in using stablecoins. And to date, frankly, I don't think really anybody has kind of captured that demand and captured that TAM. And I think our platform is going to be very, very well positioned to do so in this kind of next chapter, in this next iteration of the company and the platform.
I'm curious, you're so close to this every day. You must have a perspective on the moment we're in with payments in the US and where things are moving in the future. It feels like for nerds like us who've been working in payment systems for over a decade, there was so much chatter about the US building its own version of PIX or UPI with the introduction of FedNow and RTPs, two competing real-time payment systems. And now, kind of quietly over the last couple of years, majority of demand deposit accounts are enabled for RTP, at least for push transactions. And yet here come decentralized payments, blockchain ledger payments that look like they'll actually provide advantages over real-time payment systems in the US. And so do you feel like what's likely to happen in the near future is that we'll continue to see fragmentation between different payment method types? Or do you believe there's an inherent superiority in the feature set of one of these payment rails that's going to bring more and more, in Modern Treasury's case, let's call it more and more enterprise and corporate payments on one rail versus the others?
We've been doing a lot of work with real-time payments since the standard came out basically in 2019. So I remember a little bit before COVID started, we had a room of fintech people. We did a demo where everybody could get $1 paid to them via the real-time rail, like while they were sitting in the room. And at the moment, that was like pretty magical. People weren't using real-time payments yet. Fast forward now, we have the clearinghouse's real-time rail, that one, as well as the Fed has the FedNow system. And we've seen actually a lot of adoption from our customers leveraging these for a variety of use cases: bill pay, commission checks, payroll payments, as a way to handle micro deposits even. And so, loan disbursements, there's a lot of places where people are using this because at the end of the day, at least for the foreseeable future, the US economy still operates in fiat and dollars. And so there's definitely a place for this, and it's a huge improvement over the ACH and wire systems. And even that the Fed is just about to raise the limit on FedNow payments to $10 million in a payment. And so when you think about that, that can actually replace a lot of the wire volume. We're already seeing wires moving to real-time payments, and as the cap goes up, you're going to see a lot more of that. And the benefit there is that it's actually 24/7, 365, and it's faster. Like wires aren't truly instant. They're pretty fast, but not actually. And it's a lot cheaper. It's like an order of magnitude cheaper to send a real-time payment than a wire transfer. So I do think there's a place for that in the ecosystem. I think one of the things Beam has done really well, and part of why we were excited to work together, is stitching together stablecoins with real-time payments, because these flows do need to start or end in fiat, at least today, to be interoperable with people's flows. And so Beam has brought the first orchestration product to market that actually does that. It stitches together stablecoins and the US instant payment rails. So anyway, let me pass it to Dan. He can probably tell you more about those use cases, but I think it illustrates how people are actually using the two of them together in market.
Yeah, I think to call out, some of the points that Matt was referencing, I struggle a little bit with stablecoins currently as a viable alternative to RTP and other domestic only rails. I think they work. There's improvement coming. Is the US a little bit behind PIX and UPI and FPS and all these other existing domestic schemes? Sure, but they've eventually come to market. And so I probably won't comment further on that. I do think, and grounding this in kind of what we've seen in market with Beam and what we continue to see in market with kind of our shared go-to-market with Modern Treasury, there are very compelling use cases that a lot of forward-thinking companies are pushing forward around using stablecoins as a kind of novel and I would say superior form of liquidity as it relates to how money moves around their network broadly. So in a P2P context, there are companies like Sling Money, who is a Beam customer and now a Modern Treasury customer, who is using the Solana blockchain, and in particular, for the most part, a Paxos issued stablecoin on the Solana blockchain to move value around the world in the context of a global Venmo, basically. And without kind of, divulging too much about how it all works under the hood, effectively, I think the core innovation that they've realized is that for a P2P network, a platform operator like Sling can manage a large portion of their network working capital in a stablecoin, and then they can move value around based on the fiat pre-funding requirements that they have, maybe in the United States and or the UK and or another jurisdiction in kind of a harder to solve country, such that they aren't constrained by pre-funded fiat accounts all over the world, and they have a much more useful form of the dollar that's on a blockchain in the form of a stablecoin, and that thing can earn yield, can become programmable, and can also interact with the fiat system as necessary to perform the very much necessary on and off ramp. And so that's one example, I think, that kind of got my eyes, or made me open my eyes to what's possible here. Not necessarily of kind of stable coins as like a transactional currency per se, but a type of liquidity, a form factor for the dollar that is superior to the dollar that currently exists within the fiat system, and in a way that's global and also fungible and compatible with the domestic systems around the world. So I think that part's really interesting. And there's others kind of in market where we've seen that to be the case. So ultimately, what does that mean for instant payments in the States? It may mean that the US domestic system becomes far more compatible, far more quickly with other domestic systems around the world. And it's been interesting to watch folks that have kind of pitched this vision of using stablecoins as this kind of connective tissue between RTPs. For example, RTP in the US, and take UPI, for example. It's not the best example for several reasons, but say, for example, you built a bridge where you could move value from the US to India using the stablecoin sandwich. So dollars into a stablecoin, transfer it on a blockchain, off ramp into INR. It'll be interesting to see what wins there, i.e. folks that are doing that in other markets around the world, using stablecoins as the connective tissue versus folks that are building bilateral fiat-only relationships between the two domestic systems. like, for example, one between Singapore and I believe India that has been built out and popularized by certain teams that are building in a fiat-only context. So anyway, I think stablecoins are a very interesting complement to domestic systems and domestic RTPs. I believe strongly in the value prop of stablecoins for superior liquidity management as it relates to them being a viable alternative and competitor, if you will, to RTP and FedNow. Jury's still out, but I'm a bit dubious.
How have you been messaging the Modern Treasury plus Beam shared vision and the complementary capabilities to your customers? I'm curious, like how you're positioning this to existing clients to get them to buy into doing different forms of payments. Maybe this is a question for Matt.
Mm-hmm. Yeah. I mean, I think it ultimately comes down to speed in a few different ways. What we're providing is payments infrastructure. So we're giving them the tools and the APIs that help them build their product and their business. And so the speed manifests in the speed that they can build and get to market. And so with the work we're doing with Beam, this product here, people will be able to build in days. I mean, we have a great sandbox developer experience, something that people can just like test on. I mean, anyone can sign up for a sandbox literally right now and like go to the website. So we don't gate that. And so something that you can build on quickly, and we underwrite you, in partnership with the folks that we're working with under the hood. So that way you can get up and moving really quickly and learn. The speed of learning is very important. So that's one form of speed, is how fast can you build and get to market. The other part is the speed of money movement. And part of why people use Modern Treasury today in the fiat only world is that we move money quickly on behalf of our customers, both on traditional rails like ACH. I mean, a lot of the payment processors, their ACH payments are very slow, and that's very frustrating. And so we help our customers move money faster, but then also leveraging the instant rails like stablecoins, like RTP and FedNow. So that way you can have like a continuous real-time system with real-time payments and real-time ledgering. At the end of the day, it's like having great Legos that help you build the product experience. And like the proof is in the customers that we work with that you mentioned at the beginning of the call, and others who have started with us on day one and grown their businesses, who have taken scaled businesses and scaled them even further on Modern Treasury. So people know that we have the infrastructure and the payment operations tools that teams need to be successful.
I guess at the end of the day, for your customers, all they really care about is my payments go faster. I know where my money is in real time at all times. It costs less to send money, and I can do this reliably without worrying about what rail it's moving over in the background.
Yeah, better, faster, cheaper. Yeah, speed of information is very important too. Like, do I know where my money is at any point in time? That's actually a hard problem. We've solved that with ledgering, but a lot of platforms are pretty bad at that. And so, it's very important both to know in real time, but also make sure you're not losing money on the back end.
Oh my God, as somebody who's built a new credit card program before, where you're using our processor as source of truth, like it's a total nightmare. There's companies like Fragment and Twist that are just ledgering companies. Like it's ledger as a service. And you think, how is this an unsolved problem? You should know where your money is because it sits in like all these different databases where you have information on where the money is in real time. But it's actually, I think it's the kind of thing that's not surprising to anybody who's built payment systems, but very surprising outside of payments, that money movement is very probabilistic. And you don't necessarily know without a good ledger where it is in real time. And it's interesting because stablecoins kind of collapse that tech stack a little bit. So you have auth and settlement, effectively provided by one layer instead of different systems that you're referencing in order to be able to move money. I'm sure that was some of the thinking, on your side, Matt, behind moving into stablecoins for your clients.
Yeah. Well, I'll just mention on the ledgering piece too. I'm not sure if you're aware of this, but around 2020 also, we put out a ledgering API product in Modern Treasury. So it was actually the first Ledgers API in market for fintechs. It was like a brand new concept having this double entry ledger. And you mentioned ClassPass earlier. So they were that first customer on Ledgers. And now we work with a lot of platforms, including stablecoin issuers, for example, who use Ledgers. And so we have this really robust scaled ledger at the core of Modern Treasury. People use it on its own, but it's also a building block for what we're building here, because a lot of fintech platforms, and frankly, even a lot of like PSPs and processors, they rely on the ledger that their underlying bank provides them, for example, or they rely on the wallet balances or whatever it might be. And that's not enough. Like, you need to have your own ledger. You need to have everything reconciled fully to the ledger. And so that's like a core part under the hood. That's part of our promise of working with Modern Treasury, is that we do that all really well in real time. So like real-time ledgering, real-time reconciliation. I think stablecoins have a lot of attributes that make them easier to ledger, easier to reconcile. So net, you need less effort to do that. Having it be in real time, having like reconciling ACH payments is a pain in the butt. But you can still do it, and we do that every day at scale. So we're just marrying those two.
I don't think I realized that. So there are Modern Treasury customers who, they said, what we're really interested in is just signing up for the ledger right now. And, maybe we'll buy into the rest of the software suite, but you offer ledgering as a standalone product functionality.
Yeah, it was the first product, is the first ledger API in market. And people just use that on its own. So, obviously it's a great product cross sell. So people can start with ledgers and then move money with us later. But yeah, it's its own fully operational product.
It's one of those things that feels like it should be a solved problem, and it's crazy to people that it's not an unsolved problem. Best analogy I've ever heard, early on when crypto payments were starting to be, at least starting to get a lot of chatter, if not become a reality, is that, if every time you sent an email, somebody printed it off and put it in an envelope and couriered it to the recipient, and then they uploaded it into their laptop and then it displayed in their email inbox, that's effectively what you're doing a lot when you're sending payments through different analog payment systems. And you don't necessarily have data on where it is in transit that's reliable. And you're moving through mediums that are not really necessary if you're able to just create a node-to-node endpoint payment system the way that you are with decentralized rails and stablecoins. And so I think ledgering kind of stems from that problem a little bit as you're moving through different media, and it's kind of hard to track sometimes, especially given that depending on the payment rail, you may not be getting information and data back that you're trying to query. Where I'm going with this is, it feels like an underexplored feature of stablecoins is programmability, that you can have, especially for B2B customers, really clean triggers and conditions met in order to create conditional logic for payment flows. That's a little bit harder to code into some of the legacy payment systems. I'm curious, if we can take kind of a peek ahead of the roadmap, what role do you see improved programmability playing for money movement with Modern Treasury customers? Dan, you've been thinking about this for 4 years, so I'm sure you have a strong perspective here.
I do. I think Zapier for money movement should exist. And I'm hopeful that we can be one of the people that are the companies that produce something like that. I think it's a pretty beautiful future if you were to be able to kind of configure fairly complicated money movement workflows, both in a domestic and cross-border context, in a way that, of course, could do so via robust API orchestration, but also in the event that you're selling into a finance person or an ops person, it would be very cool if that functionality could be kind of married to, a no-code dashboard in a way that's very, very easy to use, easy to get going, and also easy to explain to a CFO or to another stakeholder that may have inputs as to how that should all be working. So that's very future state, but that's the first thing that came to mind when you kind of mentioned what's possible here on how things should exist, in my opinion, in terms of money movement. In the near term, I think what we're seeing right now is that the usage of stablecoins is still fairly simplistic. It's on-ramps, and then you send it somewhere. It's receipt of stablecoin, and then an off-ramp, and then a payment. There is very little, from what I've seen, and I think, having spent a lot of time in the space, open to kind of challenges and other kind of opportunities that are arising, especially around the world here. But I wouldn't say that I've yet seen the usage of stablecoins for like very complicated, complex workflows. So the most that we've seen right now, and Matt referenced it at the very beginning of the chat, is the usage of stablecoins for, on-chain cross-border value transfer, where USD is the source currency and maybe Mexican peso is the destination currency, and like an FX type of concept. And that's awesome. I think that should continue to grow. I'm very excited to see where that space heads. But complicated workflows where money stays on chain for longer is an area where I think we're going to see a lot of continual improvement over the next several years. But ultimately, I think I'm a firm believer that what goes in still must come out for a while, right? And so really excited to see what developers really start doing with, infrastructure that's capable of handling not only complex workflows, if you can dream it, you can achieve it type of thing, but also payments at scale in a way that really hasn't been enabled yet by many infrastructure providers out there, especially in the payments realm. A lot of crypto infrastructure is obviously very, very scaled on the brokerage side, but I wouldn't say that we've crossed the chasm at scale to the usage of these primitives and for payments only. And of course, there are players out there who are starting to do that, but I wouldn't say that we could all get behind yes, we've made it. We've achieved this thing that is, on-chain payments yet. And so I'm excited about that, broadly.
Yeah, I mean, on the programmability of money, goes back to the earlier conversation about the instant payment rails or fiat versus stablecoins, who can innovate faster and get more adoption. So for example, there's actually an attribute of the RTP or there's a way to use the RTP and FedNow system to receive funds. They call it a request for pay. So this is a mechanism where I, as an originator, can request money from somebody else, and then they can approve or deny it, like the way you would approve or deny a Venmo request, and push funds out. So in essence, it can be used instead of an ACH pull or instead of an ACH debit. And the benefit of the rail is that since the other party's authorizing the push payment, there's not the return risk there. There's not really a mechanism for them to dispute it and get their money back. So in theory, it sounds great. It's sort of technically supported, but really the banks don't support responding to requests for pay messages. There aren't that many originators. So in practice, it's not something that you can really leverage. What I'll say is that our customers really want to use it. So we have payroll companies like Gusto and Bamboo HR and Check that use Modern Treasury. And one of the types of things we talk to our payroll customers about is this, because you can envision a world where you have an end-to-end instant payroll cycle where you could get money from an employer and then pay out employees and tax agencies instantaneously using the real-time rails. So the question with programmability of money is could you build that into stablecoins first, where you could have some mechanism where you could have a request for pay. And so of course that means that the person you're asking money from needs to hold the balance or have some partner that could move money into a stablecoin balance. But there's no request for pay mechanism in stablecoins today, but it'd be very interesting if that's something that could be built. It could leapfrog the traditional real-time rails. That's something we'll be looking into as well, as we do more work here. But I'm excited to see what we can accomplish with stablecoins and programmable money.
Yeah, it's interesting. I feel with the advent of stablecoins in tech right now, there's a lot more crypto curious customers out there. Payroll providers are a great example who are saying, "Oh, actually, could I use digital currencies and stablecoins?" And if companies like Modern Treasury are doing it, then they probably vetted the technology and it's in a place now where we can actually think about how we can integrate it into our core systems. I'm curious, if we can get a little bit of a glimpse of the future here, how have regulatory clarity and this new spate of stablecoin infrastructure opened up new opportunities for y'all? And are there any previews that we can get of the upcoming product roadmap, things that we can expect to see launched, or just kind of broad themes that you're focused on in 2026 as building?
Yeah. I mean, I think the regulatory clarity and everything happening is what in part gives us the confidence to pursue this path around stablecoins. And I think it's pretty clear at this point that they're here to stay. It's a better system in a lot of ways. And so it's going to be integral to Modern Treasury in the payments product. And it's not, like we were saying earlier, an either or. It's one platform that works easily across the two of them. So I think over the next few years, what that will look like is Modern Treasury handling trillions of dollars of payments on behalf of our customers. In terms of what the platform is going to do, it's really just enabling seamless money movement. So it's going to be continuing to connect to different local corridors, especially over those instant rails. I think we're going to see, like Dan was mentioning earlier, the FX markets move on chain. So that's something that we're very excited about, how we can help there. I'm sure we'll work with partners around that. I mean, ultimately, we're trying to build this toolkit for money movement and to have it be instant around the world and have it work at tremendous scale. And so we just want to make sure that our plumbing works really well, that it works for innovators, that it's fast across the board, the ledgering, the compliance, the KYC, KYB, whatever you're doing, down to the payments, and that it can support our customers in scaling their platforms.
Yeah, I would add I'll tie it back to the point on like this notion of crossing the chasm between a crypto-centric TAM, maybe not a crypto-native TAM, and what's now possible. I would argue like the vast majority of global TAM was probably, at least as it relates to, well, the vast majority of TAM overall was probably pretty untouchable unless there were regulatory clarity, right? And if we hadn't achieved that, we would have probably been stuck in this world where crypto use cases and or gray market use cases were the primary TAM. And now that's different. I vividly remember a slide that we had in one of our pitch decks that was like, okay, here's the TAM right now. It was basically market cap of crypto, as I summarized earlier. And then here's like a ladder over to this much larger TAM. If this whole thing works, then this is going to be really interesting, and the TAM's in the trillions, right? And so I think regulatory clarity and what's happened to date and what we expect to happen in the next several months and years is, basically the industry kind of threading a needle in some way, shape, or form to get to a place in which what's possible with this technology is a lot more interesting than it was a year ago, and especially 2 years ago, given kind of what the kind of bank sponsorship and regulatory environment looked like then versus now.
It's also been notable that after a few years where deal volume was down and M&A was lower and more difficult to go through with, there's been a lot of increased deal making in this space as well, definitely in the second half of this year. Coinbase and Ripple have made multiple acquisitions focused on payments infrastructure. There's rumors about MasterCard making a big acquisition. Stripe has continued to make payments acquisitions focused on stablecoins. I'm curious, what's your read on the space? Do you think we're going to see more of this?
Yeah, I think we will. Obviously, a lot of people are excited about it. Well, acquisitions are very hard to do correctly, and we've said how we're planning on integrating Beam. Obviously, people are taking different approaches, and some are being kept more at arm's length. So, I'm curious to see how it goes. I think also these acquisitions will create room for new entrants, so like new startups who are going to be providing products and probably be a lot more nimble than the company that just got acquired. And so, you never know, but yeah, I think we'll probably see more over the coming like 6 to 12 months.
Yeah, I would agree. Very exciting. Yeah, it's only just begun. Plenty more opportunity. I now think that, some of the larger incumbents will have things within their arsenal to compete in a way that's great and validating, but also to Matt's point, that's going to open up a lot of opportunity and kind of niches in market that will be underserved by folks like that. So overall, super positive, excited for all the teams involved thus far. And I'm hopeful that more happens. I think it's good for the space overall, for more activity and more buzz and excitement to kind of happen in the space to, frankly, increase the momentum with which we can build product and sell product.
Definitely. The race is on now. John Collison had a quote recently where he said, it's going to actually look cute looking back at where stablecoins were. People feel like the hype has exceeded the reality for stablecoins as an ecosystem, but with just how quickly it's growing, we're going to look back now and say, oh, this is really just 1% of the beginning. So I'm excited for Modern Treasury to have a front row seat in driving that revolution and to see what comes next out of the product roadmap. Hopefully a lot of launches in 2026. Thanks so much, both of you, for joining us. I know your schedule is packed, having just gone through the acquisition and having a lot of these conversations, but I appreciate you making time to talk with us. Are there any closing thoughts you can leave? Any key hires you're looking to make or big thoughts for the future? Anything to call out to our listeners?
We just love building with folks. And so, anybody who is getting started, like if you're in the YC batch, up to anybody building a new product or scaling a product, like we, reach out. Like we also put out a lot of content that just explains how things work. Like we talked about ledgering earlier, even if you don't plan to use Modern Treasury. And so, I'd recommend giving some of that a read so you get to know us better. Dan can talk a little bit too about some of where we're adding to the team.
Before I dive into team, I would just add, if you are building net new stablecoin products, come talk to us first. There's probably, at the very least, some information that we can impart and wisdom that we can impart to make your life easier. And at the most, possibly some products that make your life easier. On the hiring front, I think we've got a big 12 to 18 months ahead of us. We'll be hiring across a lot of different dimensions. I think as it relates to how Beam now fits into the Modern Treasury org, we are the team that has historically worked as a kind of as a payments platform that sits in the flow of funds. So a lot of the people that we'll be hiring for are folks that have experience managing compliance programs and scaling compliance programs, for example, in which Modern Treasury is now doing full scale, onboarding KYC, for example, and full scale AML monitoring, for example. So compliance and compliance ops is definitely an area where we're going to continue to invest. I'd say more broadly outside of that, always excited to meet folks in product and Eng that are excited to kind of work in between two worlds. If you're out there and you've worked in fiat land for a long while, and now is the time to jump into stablecoins, I'd love to chat. I think we would all love to chat. And if you've been in, the furthest reaching stablecoin land and you're ready to, interact with real society a little bit more, we'd be happy to chat a little bit more and, see if there's a fit for kind of this convergent layer that we've begun to build out and we'll continue to invest in.
Awesome. Well, excited to see where the convergence goes. Thanks so much for talking to us today. Good to see you.
Yeah. Thanks you. Catch you later.
Talk soon.